Taxation issues have been the major preoccupation of taxpayers for many years, but recently the Internal Revenue Service (IRS) has become increasingly more proactive in implementing policies intended to affect the tax liability of taxpayers. Currently, the IRS is revising its tax regulations, creating several new tax code sections, and implementing many administrative changes. Because these changes are intended to better protect the interests of the IRS, many taxpayers are confused about how the changes will affect their current tax liabilities. This article is designed to help educate you about the latest IRS policy developments and how they may affect you. The Internal Revenue Service was urged to revise its tax code in response to recent legislation passed by Congress. The House and Senate recently passed a tax relief bill that temporarily alleviates many taxes liability situations but does not change the underlying laws. This legislation, called the Tax Cuts and Jobs Act, contains several important provisions. One provision eliminates the audit clause of Section 636, which was used by the Internal Revenue Service to pursue taxpayers for income tax liability that may not have been incurred. Another provision allows taxpayers to deduct expenses for travel within the 50-state box and eliminates the penalty for prepayment of an advance payment. The changes were included in the House and Senate versions of the tax code. The Internal Revenue Service has issued revised regulations for several tax subjects. Among these topics are revised definitions of taxable foreign sources, installment payments, dividends and interest, tax liens, tax credits, and property taxes. In addition, the revised tax law specifically authorizes the IRS to penalize taxpayers who fraudulently try to evade the payment of taxes. Specifically, the penalties apply to taxpayers who attempt to avoid the payment of taxes by creating a false tax claim. When it comes to QSERA tax regulations, many individuals and businesses are confused about how the tax law will affect them. There are many aspects of the tax code that will impact you, including the tax due on a large scale, but very little in terms of the individual tax liability. The biggest issue is probably the proposed tax regulations for Social Security benefits. Many people believe that this includes self-employed people, but this is not true. Only individuals who are receiving Social Security benefits will be affected by the new tax law. As a business owner, you should review your tax records, make any necessary adjustments, and keep all records for filing purposes. You should discuss these matters with your CPA before deciding if you need to file an application with the IRS. If you are uncertain as to whether you qualify for a refund, the IRS will help you determine the amount you should receive. There are many resources available for tax law and tax regulations. The Internal Revenue Service has an informative website that contains a great deal of information regarding tax laws. The Tax Laws blog provides tax news and analysis. The Taxpayers Digest is a great source for keeping up with tax regulations and other news. You can also sign up for the Tax Practitioner newsletters to receive tax-related information in your email inbox.